Will inventory increase by 15% over the next few months? If so, what does this mean for the market? Hey everybody, I'm Alyson Wahl with Live South Denver, your real estate strategist and realtor for the South Denver area. So Zillow shared a forecast that says 850,000 homeowners are going to be exiting forbearance between August and October of this year, raising inventory nationwide by 15%. If this actually happens, it would move the needle on a national scale to 3 months of inventory. But what does it actually mean for Denver? We have had such low inventory for so long. The numbers here really aren't as encouraging. If we got 15% more inventory than we have right now, we would be giving buyers a whole 3 weeks of inventory. Effective August 31st, mortgage companies have to tell homeowners their forbearance repayment plans. And as long as the homeowners are working with the mortgage company, they aren't allowed to start the foreclosure process until sometime next year at the earliest. And of course, they also must give the homeowners options to avoid foreclosure. So this foreclosure crisis that has been talked about for months and months and months on end is really still going to be stretched out a little bit farther. And with this much lead time, this much preparation, and all of these services going in to help avoid it, I think we really may see some organic increase in inventory as homeowners sell off their home in this equity-rich environment to avoid foreclosure and what it will do to their credit, as well as fewer foreclosures than everybody is doomsday saying that we're going to have sometime next year. I'll happily take a 15% increase in inventory, though I don't want to see it come around because people can't make their payments and keep their home. But we need more inventory. Why? We're in the greatest organic housing demand since the 1950s. Millennials are roughly 25 to 40 years old right now, and 4 million of them every year for the next 3 to 4 years are going to be turning 30 years old. Half of all home buyers are under the age of 36, and more than half of all homes sold are sold by sellers under the age of 41. So in other words, the housing market is in the hands of active millennials. If we compare this back to 2005 to 2009, leading up to the Great Recession and at the start of it, the number of people turning 30 was 3 million a year, 25% less than we have today. And across the country, months of inventory was more than double what it is now on average from 2006 to 2011, with the peak being, as you can guess, right in 2008 at over 10 months of inventory. So since our real estate market is not headed for inherent collapse immediately and we need more inventory, homeowners have a thought-provoking question to ask themselves. Should I sell my home and does it make financial sense for me? Now, your first thought might be no. Stop asking me to sell my house. But listen to this. Average home prices are up about $100,000 over the last year and up about $400,000 over the last 10 years. All great news for homeowners. If you'll remember that tricky little thing called taxes, the capital gains tax exemption limit is $250,000 for a person filing single and $500,000 for a married couple filing jointly. So let's put all this together. If you're a married couple that bought a home 7-9 years ago and you've seen $350,000 in home value increase, in the next 1 to 2 years, if we stay on the path that we are on, you may hit the $500,000 threshold in equity gains. So if you want to avoid paying capital gains tax when you sell your home and you already have thoughts of selling on the horizon, it really may be time to start planning. It doesn't mean you need to sell by December of this year or spring of next year, but it really may benefit you to be talking to your financial planner, your tax advisor, and see when the right time is to get on track to avoid paying taxes you don't need to pay. And if that has planted a little seed and now you're pondering, maybe I should sell, does my place need a few updates? Here are the things that home buyers looked for most in the first half of 2021. 28% of people looked for a quiet location. 25% of people wanted an updated kitchen. I'm gonna guess the other 75% are either split between new construction and willing to do the updates themselves. Everybody wants an updated kitchen. We have a third place tie at 24% for garage and large backyard. And rounding out that top 5, 20% of people looked for outdoor living areas. So if you haven't refinanced yet and you want to, the rates have not gone up much. Or if you refinanced before rates were as low as they are now, it might be to your benefit to do it again. Rates are still at and below 3% for many, many people. And the plus is, during the pandemic, if you hadn't heard, there had been a refi fee added on to so many different loan products that has been taken away. So now refinancing is a bit cheaper once again. Here's some other quick stats and info about the market before we dive into the numbers. In the first 4 months of 2021, 30% of all real estate transactions have been done in cash. Yep, hard, cold cash. This is up nearly 5% from the year before. Since 2019, Denver's average home price gains have been under 15% for homes within a 10-minute radius of downtown Denver. But when we stretch it out far and we get to homes in the 71 to 80-minute radius, I mean, now we're talking pushing up toward Fort Collins, pushing down toward Colorado Springs. We're talking quite a commute. The average home price change is plus 33% since 2019. This really works in tandem with what buyers want. Turnkey homes, light, bright, open area, easy to maintain, and new construction fits the bill, and there's really not a lot of opportunity to build in and around the city. There's the occasional spot for infill from an investor, but if we're talking new communities, amenities, those are farther and farther and farther out. Most of the time, we're already at 40-minute commute time into the city to get to new construction, and then the more affordable options so that we can still be at or around $500,000 to $600,000, you're getting into that 70 to 80-minute commute time. I think that's a huge part of why this data point rings true. Here's something we don't talk about much, but I do get asked a lot about the rental market. No, I don't do rentals, but yes, I do have my pulse on the rental market. There are some noteworthy updates, so let's touch on those quickly. In Q2, apartment vacancy dropped 33% and rents increased 7%. Quarter over quarter, this is one of the largest changes Denver has seen in a long time. Also, rent collection is back up to near pre-pandemic levels, right around 97%. And with investors seeing that home prices are rising and Denver is going to have more and more people renting and renting permanently, this happens in every city where home prices increase drastically. There's a strong tie between home prices and rental rates in cities. The higher the home price, the higher the rental rate. So again, as investors are watching this trend, especially over this last year here and how our prices are going up, it's not scaring them out of the market. They're just looking differently at how they invest. They're jumping in, grabbing properties for rental because they know that the rental market's gonna maintain its high demand long term. The ramifications of that for home buyers, it means a tighter market because some of these investors are large real estate investment corporations, and others you've got investors who are seasoned and have a lot of cash on hand and can come in and make nice, clean offers that sellers love. All right, I think that catches you up on real estate news. Here is Denver by the numbers. 5,800 closings in July, down 15% from last year, but up almost 6% from 2 years ago. We are still comparing ourselves to 2 years ago because of the complete anomaly last year was. Both attached and detached homes were down compared to last year, and both were up compared to 2 years ago. Attached homes have made the greatest gain over 2 years. Buyers put 5,700 homes under contract in July. This was down 7% from last year, but up 10% from the year before. This was the second strongest July we have had in 10 years, second only to last year when we emerged from the pandemic and everybody glommed back into the market. We had 6,800 new listings in July, 3% fewer than last year and up 12% from 2019. Even though it was 400 fewer listings than the previous month, it was still the third strongest outing for July in a decade. And with about 15% more inventory overall, buyers were seeing the difference and feeling like they could be a little bit more picky, and it slowed the pace of the market. We saw buyers not jumping in and making offers on day one. We're seeing fewer bidding wars. There's definitely a change of the pace of the market. Also, over 5% of the homes listed were above the $1 million price point. The average days on market was 9 days, same as the month before, and the median days on market was 4 days. It's held that way for 5 months straight. The average list price to sales price ratio finally dropped. We went from 105.2 to 103.8. I am thrilled by this news. It actually dropped faster than I thought it would in 1 month. The data point gives proof and bearing to the fact that we are seeing fewer and fewer bidding wars and more offers at or close to list price. And even when there are bidding wars, they are nowhere near as extreme as we saw earlier in the year. Again, this is music to my ears. I love it. It gives strength and courage and a reinvigoration to my buyers in the marketplace. And sellers, you are not losing out. If you're pricing your home right, you're still getting list price for your home in nearly every situation. The average close price for all homes last month was $618,000, down $20,000 from the month before, yet still up 17% from the previous year. It's also right on track with where we've been the last several months, and it's up 27% from 2 years ago. But let's camp here for just a minute and talk about why it's 20% less than the month before. If you don't really understand how the market trajectory tends to work, you might hear that that and think, oh, the market is slowing. Look at that. It slammed on the brakes. If it keeps on this way, I'm going to be able to get a house for less than list price. Sellers are going to have to cut their prices. This is what I want, and I'm going to wait to buy a house. It might work in your favor to wait. I'm okay with that. However, the traditional way that our market looks for inventory and home prices is that prices go up about the first 6 months of the year. Our prices typically peak in May or June, and then they slowly taper off and flatten out through about December, sometimes January, and then they do the climb again. It's a little like that game on Price is Right with the yodeling guy who goes up and up and up. But we do have a little taper off that happens, and we start that over and over and over every year. So to me, this isn't really a sign of a major shift in market or decreasing prices, at least not now and not yet. It seems more like the market is getting back in its groove and going back to the way it was pre-pandemic, and this is great news. It gives us the ability to get back to where we can project and understand what's coming. Condo and townhome average prices are up 23% since 2 years ago, and single family home prices are up 29% since 2 years ago. We always like to break those out from the whole home average for you. The median sold price across all of the market was $535 last month. For the detached home, it was $595. For condos and townhomes, it was $379,500. These are up 22 to 29% over 2 years ago. So buyers, the great news is if you haven't picked up on it already, the bidding wars are nearly done. If you waited out the spring or you had jumped in and got tired and pulled back, now's the time to jump back in and see if you can find a home that you love. Sellers, track your equity against your moving plans. And if you already have upcoming moving plans, consider how these forbearance conversations with homeowners may impact inventory heading into next year. Ultimately, being a great looking big fish in a small pond always improves your bottom line. Thanks so much for catching up on the Denver market with me. If you have questions, I would love to chat with you, and I will see y'all next week.